Good morning, everybody. Welcome to Monday morning's game plan here at Verified Investing Studios. Amazing to be here with you every Monday morning. I am pumped to get back here for the game plan so that you guys plus me can all prep for the trading day. That's crypto, commodities, as well as stocks. Lots to go over. Last week was an exhausting week with the Federal Reserve. So much going on, so many charts to look at today. Let's get started. All right, guys, let's get into it. All right, good catch. First and foremost, guys, what we have to do here is we just want to take a look, and I want to scroll down and just go over a couple things. So I'm going to go over this. Buffett nervous about economy as he raises cash. That's a big deal to me, and I want to talk a little bit about that. But just as we scroll down, don't forget, guys, charts are updated every weekend. Coffee into a major level here. Game over. Alphabet tags long-term trend line. Technical analysis on Bitcoin, Ethereum, and other cryptocurrencies. As we scroll down, we get even further down into the economic data. I go over put-call ratios right here, as well as plenty of other data right here, more educational, economic stuff that will in kind of open your minds to what the mainstream media is not talking about, guys. And that's really the goal here at Verified Investing. Don't forget, it's all about going over the keys to what you're not going to hear out there by just scrolling through some of these other places. All right, looking here, we have our earnings calendar. Every Monday, I like to go over the earnings calendar. Now, we are through a majority of earnings, but there are some earnings we're going to watch. Palantir today after the close. That stock already up. Lucid, not really a big company anymore, but just interesting to watch. Microchip right here. Tomorrow morning, Walt Disney. That's going to be a big one. We have Lyft on Tuesday after the close with Wynn Resorts and Twilio and Upstart Holdings. Wednesday, we have Uber, Shopify, Affirm, that's pre-market, and then aftermarket ARM. ARM is a semiconductor that will be a big mover. Airbnb. Now, interestingly enough, guys, if you looked at Expedia earnings, and this is something that, again, I've talked about, but Expedia earnings came out on Thursday after the close. The stock was crushed on Friday. The reason why they talked about their miss on earnings or guidance was because of their VRBO. Now, VRBO, for those of you that don't know, is essentially their arm of the company that is like Airbnb. So I'm very curious to see Airbnb's earnings. We'll go over the charts later this week going into those earnings as well. And then Thursday pre-market, we got Roblox, and Friday Marathon Digital there for you crypto fans out there, Unity, Akamai, and Dropbox, or that's Thursday after the close. Also economic data right here, guys. All right, so last few things I want to do, just remind you guys that, again, we do have that new section of educational articles down here. I wrote an article this weekend, Why Interest Rates Matter to the Stock Market. It lays it out in such simple terms that anyone can understand. Now, right into the charts we go here. Let's get right into the action. So what we're looking at is a gap up in the stock market today. All right, so the stock market, again, looking to open higher. Why is that? Well, it's the simple adage of whatever the dollar's doing and interest rates are doing, the market will do the opposite. It's this inverse relationship. So what we're looking at here is the US dollar chart. And what we see on the US dollar chart is that the dollar continues to decline. Trust me, it's not a weird random occurrence that the stock market has been going up as the dollar has been declining these last few days. There is a coordination there. That's how the markets move right now. So again, as long as the dollar continues to pull back, then you likely have a neutral to positive bias in the stock market. One level to watch, though, this right here, right? So we had the wedge pattern, and we had a hit here, and it goes off the screen. But what we see here, we broke out, retraced, double tap, rally. If we come back in here, that's your technical support level on the US dollar. Now, believe it or not, we have a minor level right here that we're basically kissing in this range. But for the most part, that bigger level will be a pullback into this 103.50 level on the US dollar. The 10-year yield continues to pull back as well. This was one of the best calls from about a week ago, a week to 2 weeks ago, when we were trading up here. And you can see I even annotated this chart with arrows, and I made it so clear, like crystal clear in these game plans, that we hit here, and hit here, right here at the lows, lows, lows. This is a classic perfect channel. Parallel lines to a T. I'm using the parallel drawer on TradingView. That's how dead on it is. What did it tell me right up here? It told me that you're probably looking for a pullback in yields. We did the same double tap right here on this level. And where are we headed, guys? Right back there. So again, I gave you guys this target about a week to 2 weeks ago saying 4.4%, give or take. And here we are at 4.477%. When, check this out, when I was making this call, we were at 4.7%. People said, he's crazy. They always say that, but that's okay. That's what I love about trading and using charts is I look crazy and then it happens. Weird thing like that. Okay, next up, let's go to the S&P 500. S&P 500, this isn't reflecting the pre-market data, but I do want to just guide you on where that is. So what we have here is we have that longer-term uptrend, which then broke. We've then now retraced. Now remember what we talked about. This wide range bar right up here, as we get my drawing tool back on the screen, this wide range bar right up here is really key. And it's the low end right here that I'm watching. This is right around 514 on the SPY. So watch that. We have this line and we have a little parallel developing right in here. Okay, so this area around 514, give or take, should be a very important level for the SPY. And again, remember the SPY, the spiders, is the S&P 500 tracking ETF. That's why I use it, because it's a little easier to chart than the S&P itself, where you get the pre-market data and so on and so forth. Okay, looking at the intraday, where are we right now? Look at this. 513.28. So I just gave you guys 514 as a key level today. At the highs here, we were getting close to 514, but we're going to open up just below this major technical level. So keep an eye on it. You can see that the trend lines, by the way, these are the same trend lines from the daily chart. We were just looking at it. You can see how we're right up in that mix, that little area there. Now, a couple things to go over. Apple this weekend was the big Berkshire Hathaway event, right? Warren Buffett, Charlie Munger again passed away, but Warren Buffett's still leading the charge there at that conference or at the meeting. And what he did reveal was that Berkshire Hathaway has sold 13% of their Apple stake. So again, he's unloading a little bit of Apple. The company Berkshire Hathaway now has $190 billion in cash that they've now accumulated on the sidelines. Now, if you're someone like me that thinks 3 steps ahead, and I know a lot of you guys are, that's why you appreciate the game plan, you have to say to yourself, well, why does he keep on loading up on cash? Why isn't he buying companies? Why isn't he buying stock with all this money? Why is he just keeping the money in cash? $190 billion. And by the way, they said they were going to be over $200 billion by the end of this next quarter, which is just less than basically 2.5 months, 1.5 months away, right? Or give or take. Either way, what he's saying here is he's still picking up more and more cash, unloading positions. Now, Becky Quick from CNBC asked him, well, what do you see for the economy? You have all this cash. Why aren't you deploying it? And he was unusually evasive. He didn't answer the question directly, and that speaks volumes. Now, if he answered the question directly and said what I think was on his mind, you'd probably see the stock market collapsing today, okay? But he wasn't going to do that. He's not going to throw, everyone under the bus that has big investments out there. He was just evasive about it. But read between the lines here, guys. What he's doing, there's a reason, and he's a smart guy. Even at his age, I think 95 years old or whatever he is, incredible, but one of the best minds ever, guys, no doubt about it. All right, in any case, looking at the Apple chart, look at the beauty of this chart. Where did Apple gap up to on Friday? Look at the parallel. And again, you guys know I love my parallels. We have right here, it goes right to this. So all you have to do is connect this line to this line to this line, drag that parallel up, and you literally got the high on Friday. What happened to Apple right off of that? It went down. It is down a little bit this morning on the back of Warren Buffett selling, but I love these parallels. Now, just a reminder for educational purposes, downsloping parallels can often eventually break to the upside, okay? Now, again, it doesn't mean it's going to happen anytime soon. We could come down here and down here and down here. I mean, year out. It doesn't have to break out anytime soon, but eventually downsloping parallels break up, and upsloping parallels like this, okay, eventually break to the downside. That's again, probability based. So you'd probably say 7 out of 10 times that's the resulting move of the different parallels. Okay. Couple other things, guys. I do want to go over a couple of these other charts like Nvidia and so on and so forth, but I have to go over this chart real quick. This is a post that I gave to members of smart money stocks and ETFs this weekend because it's astounding here. Now, one of the things I want to talk about, what this chart is this is the yield curve, right? This is essentially the inversion of the yield curve. And what you're seeing is that this is the zero line. So this right here is the zero line on the yield curve inversion, and this is how long it's been inverted. Yield curve inverts in July of 2022. Now, the reason I'm bringing this to your attention is, number one, recessions happen when the yield curve uninverts. Well, it hasn't uninverted yet. We're still negative. So therefore, we're not at a recession, which makes sense. The second factor of why I'm bringing this up is because the yield curve has now been inverted for 500 days. 500 days. Now, if you're someone like me and love to investigate, you say, well, how many times historically have we seen an inversion of 500 days or more? The answer is 3 times. Just 3 times in the history going back to really 1900, if not prior. But again, when they were really tracking this, the yield curve inverted just 3 times for 500 straight days. I'm going to write the dates up on the board here. I want you guys to pay attention. Okay, the first date when it was inverted for that long was 1929. Okay, second date, 1974. Remember what happened. So what do we have here? Great Depression, stock market crash. What did we have here? We had basically the 3 attacks of inflation and the long period of stagflation, right? From the 70s into the 80s, right? Interest rates were in the 15+ percentile or percent range at one point because inflation was so high. Lastly, when was the last time we had a 500-day inversion plus of the yield curve? 2008. And we know what happened after 2008, the Great Recession. And so if you're like me, and again, we draw conclusions based on data, this show's about data, verified investing is about data, then what else am I supposed to think? Seriously. This somehow is going to be different? I don't know. Now, again, please understand, this doesn't tell us like tomorrow we're going to, it doesn't tell us that. It just tells us that there's something on the horizon, something lurking. And me as an investor, I'm a swing trader, so I'll go long and short a million times over, but I'm certainly more happy to have my gold in my longer term portfolio. And even those of you that are big believers in Bitcoin, I can understand why you would want to have some Bitcoin for the longer term when you see stats like that. Okay, so I just wanted to go over that. I thought that was a key one. Quickly going over the Nvidia chart. Nvidia, again, guys, if we flip over to Nvidia, we can see that Nvidia has had a good bounce. There's a channel here that I'm keeping an eye on as well. It gives us an upside zone of around $915 as a potential maximum. That's also, again, interestingly enough, if you connect this high down here, it also gives us this high to this high and also coordinates right over in that zone there. So 920, 915, that would be a level where you should expect, if Nvidia gets to it, likely to see some downside pressure. By the way, Nvidia doesn't report for a few more weeks, but eventually we'll get that earnings out from Nvidia. That should be pretty wild stuff when that one is. I'm hopeful we'll do another live for that event. Last time we had all the traders in here analyzing the chart. It was a lot of fun. It was honestly wild. We had some fun bets. We should have just broken out our beers as well. Would have been even more fun. But hey, we'll do that maybe next time. Google, guys, Google, this was just an incredible chart that we had gone over. I had gone over this with you guys of why I thought Google could gap up on earnings and then crap out. If you look at this, there's your 2008 high, 2007-8 high before the Great Recession, connected right here, and it went right up there. Then you have this secondary trend line coordinating, and if we zoom in on this chart, I mean, literally on those earnings, it opened right up into it. Now, this is the weekly chart, but you can see right up into that level, and we've seen the sell-off since. The power of trend lines compels you, right? That's the incredible stuff about it. Okay. Next up, we have Amazon. Amazon, to me, is a chart that I am not messing with on the short side yet. Yes, we did kind of kiss double top, but if we look at the daily chart, what does this tell us, right? You are in a channel, right? And there is a chance that we could still go up in this range. I'm going to switch my color back to yellow so you guys can see it a little better there. But right up there, that would be where I would start to mess around with a short play on Amazon. Likewise, if it came into this zone, that would be a good area to be a buy in the near term. Interestingly enough, that upper line is right around the even number of 200. If you know about the psychology of markets, the even numbers do carry some weight. Not as good as a real factor like a trend line, but it's an additional helping hand on the charts. Many of you guys are all about the Tesla chart. Figured I'd go over it today. This is the last one we'll do before we spin the wheel and find out who won the $300 credit. But basically, Tesla was a buy going into earnings. I gave it to you guys right here. I said, this is the chart you want to buy going into earnings. Everyone hated it at the time. Oh my God, worst thing ever, blah, blah, blah. Tesla's done. I don't care one way or the other, frankly. I'm all about the charts, low pivot to low pivot, right into earnings right there. Boom, from $140 to $180. Now, to be honest, what is the chart telling me? There's not a lot it's telling me. It's honestly, it's had its run. It's pulled back a little bit. It could go back up. It could go back down. And as a technical trader, you have to be okay with that. There's sometimes where the bias is heavily negative or heavily positive, and then there's this big gray zone in the middle where it's like, it's basically what I call a do not touch, which is it could go up, it could go down. Basically, odds are 50-50, 60-40, 55-30, 45. You know, it's in that zone of where it's a gamble, and there's no reason for me to mess with it. There's too many other trading opportunities between commodities, stocks, and crypto to even mess with a chart that's in the gray zone. So that's where we are right now. I don't have a lot of that other things to go over there. Next up, let's quickly do our quick rotation or figuring out who won the $300 credit right here. Let's do that right now. And for some reason, it's not working. Okay, well, I guess we're going to have to wait. So you know what we'll do? We'll come back to this. We're going to go to the wheel right now, and we're going to spin. Maybe Lawton, if you could jump out and just try to fix that for me, that would be awesome. So what we'll do is we'll spin this for the next one, and then we'll fix that and do the drawing in just 1 second. All right, let's do that right now. All right, the next one is, look at that, Trader's Edge, guys. Trader's Edge Crypto. That is Paul Sampson's service. He's a rock star at trading crypto. And again, guys, he does some day trades, he does some swing trades, and it is an amazing service. He constantly keeps you updated with posts throughout the day, even on weekends. So again, someone will win 3 months of that service valued at $300. All right, next, guys, what we're going to do is we're going to take 30 seconds to thank Lux Algo. Again, this is one of our biggest sponsors here. They help us do this whole show. They help us support all the things that we have, all the cameras and these screens that allow me to do everything. So thank you, Lux Algo. Take it away.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
Alrighty, guys, we are back in the action here, right into the chart of Bitcoin right here, and we will do that drawing. We're just getting it fixed, so don't worry. The Wheel of Appreciation giveaways do continue. Rain or shine, we'll get you guys someone out there to win today. All right, looking at Bitcoin, check this out, guys. So again, you guys know I love my channels, right? I'm a big fan of the channels. I think almost every chart I have them on here, and one of the reasons why I like channels is because almost no one uses them. Now, I am giving some of the keys of the castle away to you guys, but that's okay. You guys are supportive of me. I'm going to make sure you guys know all the key nuances that I use. All right, so what we have here very clearly, right up here, we have this area here to here. We have this low to this low, and that creates this channel. So what does this mean? Well, it means that basically Bitcoin is just gyrating sideways now. Now, we had some other levels. There was an upsloping level that has broken that we have to monitor, but now I'm focusing on this bigger one here. Now, again, we break to the downside here, and we've talked about this. We go to that 52 to 53,000 zone, maybe 49. If we come up and we break above here, yeah, I mean, you might stop at the double top, but this breakout of this channel would be a big enough one to send this to new all-time highs. So again, really at this stage, you look at resistance here, support right down here, and again, you can see we just bounced here. Midline, by the way, the midline is checkered here. It's a little hard to see, but that will be a little resistance. Now, we did see Bitcoin up pretty sizably this morning, and it did go back down. We've now moved to the negative side on Bitcoin for the day. But in all fairness, on Saturday and Sunday, it was up a little bit. So it's just reverting back to as if the weekend didn't really happen. Not honestly a big deal whatsoever. Okay. Let's go to the Ethereum chart. I mentioned last week I did cover my short on Ethereum in the money. The reason, again, and this has turned out to be a very good exit strategy on it, was just this longer-term trend line. So we see very clearly right down here, right? This low, you take the low from October of 2023, connect it right through this low, and we got that low right there of last week. Since then, you've had about a $400 move off of that from the low to the high. But again, that's your level. If this breaks, then you have to start to be very nervous. As of now, this is a longer-term trend line. You can see, again, it just happens to kind of bounce along here. Then it had this huge move up. Then it came finally back to it. As long as this line holds, this is the uptrend line on Ethereum. If it breaks, watch out below, but at this point it is holding, so you give it the benefit of the doubt that, again, as long as it holds, neutral to upside bias. Okay, all right, we're going to do that drawing in just 1 second, guys. In fact, we'll wait till the end after I go over just a couple more charts. Gold's getting a bounce today. Middle East tensions are mounting just a little bit, so again, that is pushing gold up. Gold, again, still overall short-term negative bias, midterm and long-term positive bias, okay? So I always try to give you guys that differentiation, because if I don't, then people are like, oh, well, he was so bullish and then he's saying, no, it's the time frame. You always have to understand there's time frames for everything. The reason why I'm still short-term negative is just because that's what the chart tells me. I don't tell the charts tell me. I just read them, right? So still got the topping tail right here, still have your wide range bar here, and we're still below this area here. So as long as we stay there, it's a negative bias on the charts in the short term. Long term, it's bullish. All right, again, it doesn't mean it has to be right, but that's the way the chart's telling me, and the midterm is as well. It's just a matter of, do we get our full pullback into this zone to start accumulating on the charts? Okay, next up, let's take a look at silver. Silver, much the same. We do have, again, multiple trend lines here. I just want to show you guys this. So you have their wide range wedge pattern that broke out. The zone here for any sort of buy, and it kissed it last week. I kept saying 26 to 25.50. We went to like 26.03 and then got this bounce back above 27. But same thing, the topping tail is still there. This is your buy zone right down in this zone here. You basically look for a retrace to the scene of the crime here. And then again, that's anywhere between 26 and essentially 25.50. So near term, still slightly negative on silver. Midterm to long term, still rosy and bullish on silver. I'm starting to eye in fact, I've even accumulated in my commodity service, smart money commodities and miners, some palladium, some platinum. Those charts actually look pretty darn good for some potential upside on those commodities, even in spite. They haven't broken out like gold and silver have. So again, I think there's an opportunity there, as again, the charts do look really good. Now, just quickly going to oil here, guys. Take a look at oil. So we talked about oil. You had the head and shoulders last week. Remember, we talked about this. And then ultimately that broke. We had the big drop. We're getting a small bounce today on the oil chart. Now, you might say, well, why are we getting a small bounce? Well, number one, you were down 1, 2, 3, 4, 5, 6 days in a row. If you know your time counts from the methodology that I teach, you know that you're due for a little bit of a bounce. But let's get even more in depth. So why would we potentially be seeing a small bounce today? Simply do your Fibonacci from your lows here to your high right here. And what do we have? We have a 50% retrace. Let me show that there. Here's your 50% retrace right there. There's your 50%. And if we draw that line, you can see you're coming right into that line. So you have a good support level right there. And you also have this area right here, this low here, this high here area, this kind of choppy sideways. You're down 6 days in a row. You just want to kind of let the charts dictate, and so you're due for a small bounce. Now, for me, on oil, I still think it's going lower. I think we're starting to see cracks in the economy. We saw a weaker jobs number on Friday, right? So jobs number was weaker. We saw GDP weaker, and any sort of continued slowdown in the U.S., oil is going to continue lower, folks. It's just there's so much production in the U.S. that we don't even need to rely on the Middle East anymore. And so a weakness here and the consumption that we do here in the U.S., you're going to see a tumble. All right, last chart, we got to talk natural gas, guys. So I have unloaded my natural gas long position, guys, but we are on the verge of confirming a breakout. That doesn't mean it's going to go straight up, please understand. But what it does mean is that we just buy the pullbacks now. So here is this amazing downsloping trend line here. In fact, we can kind of see it up here to here, and then we had this. So I've been telling you guys that I thought it would go to 225, right? Well, now we're at 231. We've gone even extended beyond my target zone, but another good call that it was headed up. A lot of people were nervous about natural gas, understandably. They call it the widowmaker for a reason. But ultimately, now assuming we confirm above today, so let's say it closes right here at 230. We now have a confirmed breakout. I'm going to zoom in on the chart to show you. So what does this mean? Well, assuming we confirm the move, which looks likely unless it reverses today, then what we do is we buy pullbacks, right? So you buy back at this line in here, And again, that would be 210, 205, somewhere in that vicinity. And we just start to play this momentum shift and this breakout to the upside as long as we don't reconfirm back below that line. Okay, so again, good stuff on nat gas, guys. Great stuff overall. I do want to just go over here, and we're going to do quickly the drawing. We have it all set up before we end, so let's find out who wins that $300 credit. As always, folks, very cool. And as I said, we're going to get this thing fixed, and I appreciate that, Tim, for getting it fixed. And the winner of the $300 credit to VI, anything on VI it can be used for, is user Lou1Yo9, blah, 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 you know. You can see it on the screen. I'm not going to read it all out. When you make too complex ones, it's too early in the morning for me. I'm barely going to get these game plans out versus reading off a crazy name like that. But in any case, congratulations. Reach out to Lawton at Verified Investing, guys. And again, you guys can, Lawton at Verified Investing will get you all set up with that credit. Lastly, I just want to mention, guys, same rules apply. Spread this around. I want 100,000 views a day as our starter. That's our base minimum. I want to show CNBC and Bloomberg and all these other places that you don't have to be a big network to crush it and get incredible views that can top them. So spread it around. Post wherever you spread it as a comment underneath this video. And again, folks, you will be entered into the drawing for that 3 months of Trader's Edge. All right, guys. On that last note, thank you for all tuning in. Let's go crush it and make some money today. Have a good one. Take care.